Good morning. I'm Epstein, and here we are the morning after. I think that's the way to say today. It is Thursday, December 19th, and that is 2024 at 8:25 a.m. Central Time. Yesterday was a strange day. The market gets exactly what the Fed had been predicted to do. It cut rates 25 basis points. It modified the dot plot to look out and say maybe two cuts in 2025. There was talk maybe you'd get three or two, so that wasn't out of the stretch. And yet the market tanks. Interest rates soar dramatically. The dollar goes over the 108 level, right up to the 108 actually yesterday. The metal markets go into a cratering mode. Energy markets held on. They didn't really fall apart. The grain markets went into a nosedive in part. The real, reacting to the dollar out of Brazil, crashes. It's at a new low. And as you look at all this going on, you go, what the heck happened? Well, what the heck happened is simple. Number one, the market punished the Fed. It shouldn't have probably done this rate cut. Number two, the oscillation that the Fed is doing. The market is beginning to wonder, including me, does the Fed really know where it's at and what it's trying to accomplish right now? And I don't think they do. I think that they are waffling between, is inflation staying too high, which it is, it's sticky, we've all known that, then why are you cutting rates? Aren't you feeding into that? Where at the same time, there's a gradual softening in the labor market, and maybe they want to stop that from getting into a snowball. I don't see that coming either. I think they're in a difficult position. So what we saw yesterday was a capitulation in all the stock indices. And this is the snapback this morning after probably overdoing what it did. But we'll talk about that in a minute. First, let's go to the morning data. And weekly jobless claims down 22,000 at 220. So you're not really adding to that story of getting worried one way or the other. Is the market falling apart in the claims? Are people able to get jobs? They are. Even the continuing fell. You're over the 1.8 level, but that's not a problem. We look then at GDP, and this is the final look at the third quarter, but it comes in strong. They were expecting up 2.9%. The prelim had been 2.8. That was an increase, but they got 0.3 better. Any way you want to look at it, that's a stronger number. The chain weighted, if you go to the PCE, it was about where it was. You were a little stronger in the core PCE. Personal consumption up. The consumer's still okay. And final sales were up 0.3. There's nothing weak here. The revisions made a stronger third quarter. The Philly Fed Business Index, well, if you expected something good, you were by yourself. I have been saying that I'm seeing this part of the market sink. We saw it with the Empire State, now the Philly. They got a negative 16.4. They were looking for a plus 2.5, but prices paid went up. Your employment index didn't collapse. It's not increasing by the same amount of number, but you did see new orders go into a state of collapse. You had been a positive 8.9, now you're a negative 4.3. That carries us over to the National Association of Realtors, which will come out this morning at 9 o'clock. In looking at Linn, Toll Brothers, the XHB, it can't be a good set of numbers. The Conference Board on Tuesday, this morning, will release their monthly coincident lagging and economic indicators for November. That comes out at 9. Now, we have three central banks today. The Bank of England came out, they held their interest rates steady. Bank of Japan held their rates steady. But Sweden's Riksbank, they cut their rates by a quarter point to 2.5%. And the other elephant in the room is the Trump, Musk, and now Vance programs. And what they want to do is raise the debt ceiling so it's not done under the Trump watch. Number two, they want to cut out all this pork. You know what pork is? Pork is when a congressman or a senator adds something to a bill to get his vote. So he can go back to his constituents, yeah, I voted for that, but look what I got you. Well, they want to cut all that out. I don't agree. I do think that they're entitled to get, after 2009, a rate increase. They don't have to take it. They're entitled if they want to take it. And a moderate 3.8, I think, is what it was. There's nothing wrong with that after all those years. So that part I didn't quite agree with. But I do agree that this is Trump's stamp. And what they made very clear, vote against Trump on this. In 2 years, as you in Congress come up, the power of whatever he has is going against you to get you out of your seat. Whoa. So that's a pretty big threat. J.D. Vance spent the evening, as I understand it, well into the midnight hour with House Speaker Johnson trying to find ways that they can get this done before a government shutdown this weekend. So we are at a funny part. So as we come back to the marketplace, that's what you're dealing with. You're dealing with today, did we overreact? If we did, we snap back. You're going to ask, and you should ask, does this mean the Santa Claus rally's over? Absolutely not. It just probably won't carry to new all-time highs. That's what I think. I think Santa is still packing up. He might have slipped on the ice and hurt himself a little bit, but I still think he and the deer are going to be okay. And that's what I'm looking for to happen, at least. In the metal markets, no, this is a problem that deals not with inflation or anything, it's China. I've said that over and over, and as long as they're not good, metals aren't good. That's the way that I have to look at that. Bonds and notes, well, the simple fact is when you go out to the 2-year, the yield is doing what? When you go up here, it means yield is falling. When you go down back here, it means yield is rising. That's absolutely normal. So the market is doing the recalibration that the Fed didn't do itself. It's really, that's the way that I'm looking at things. So with all that, I will catch up with you tonight as we review and see if the market held on to the rally, if it added to it in the stock indices, and how the rest of the markets are going to try to deal with it. View this as the day after, and it will be an interesting trade day. I'll catch up with you tonight.